welcome back to another video. Today we're going to be talking about, is the stock market crashing or going to crash in 2025? But before we kick it off, I just want to say thank you. We are so close to 100 subscribers and it means so much to me, every single one of you. So I appreciate it. So let's get into it. First things first, we're looking at the S&P 500, which is considered the market, right? And what is a stock market crash? So we need to do some housekeeping, talk about some definitions. So there's a difference between a correction and a crash. So a correction is when the S&P drops 10+% from its recent highs, from its all-time highs. And a crash is when it's dropped 20% or more from its highs. We're not in either one of those territories right now. When we look at the S&P 500, we're sitting at 580. And our all-time high was 609. Right there, 609, 610. So when we look at where we're sitting, we're currently sitting at around 4.8%. So we're approaching that correction territory, but we're not quite there yet. So I got the Bollinger Bands pulled up, got a 6-month chart here, and you can see. But don't panic. Don't panic at all. If you want to make money in the market, you have to accept these things as they come to you. Oftentimes we approach this with the wrong mindset. You want to make money, right? You want to make money. So you want to see the market pull back a little bit. You want to see it cool off. We just had 2 record years in a row. Let the market take a little bit of a breather and then let us get back on track. Like, look at the fear and greed index right here. Look at it. People are afraid. Why would you be afraid? But we need to change this mindset. Everybody was doing all this buying when the market was at all-time highs. When the S&P was sitting at 608, 609, 610. Everybody was doing all this buying. But if you had all these items in your Amazon cart and they were 5% off, 10% off, 20% off, you would be ecstatic. You would be ecstatic. You're like, oh, I'll buy that any day. Why don't we do the same thing with stocks? I don't understand that. So if you want to turn around and have these big returns, if you want to show off the 50% return, the 75%, the 100% returns, you need the market to go down. Like, if I showed you guys some of the stocks I bought in 2022, and I've been investing since 2016. So if I showed you guys any of the stocks I bought back in 2022 when we had the big tech dip, like, I'm up 100+% on a lot of those positions. Like, you have to welcome these moments in order to get those type of returns. The market is not going to go up in a straight line. So let's hop back over and look at the S&P and let's talk about why it went down in the first place. So when we look at it, on Friday, the market dipped a little bit, right? We had the jobs report come out. It came out, and the jobs are still up. So employment is still up. And you have to understand, the economy and the stock market are 2 different things. They're 2 different things, right? So on one hand, the economy is still holding in there fairly strong. People are still working, which you would think would be a good thing. And it is a good thing. I'm glad people are working. Like, I'm glad I still have my job, you know? But the stock market is a whole different vehicle, a whole different animal. They want to see rate cuts. They want to see the bond yields go down. They want to see inflation go down. We all want to see that. We all want to see inflation go down. But you see what I'm saying? It's like they want to see employment go down. And the reason I want to see employment go down because that means the Federal Reserve be more apt to lower rates. And in my case, it's like, who really cares about the interest rates like that? I mean, yes, it's all important, but at the same time, it's like, man, people are working. Okay, big deal. But I do get it from a financial standpoint. The bond market is a, you know, multi-trillion-dollar unit market, right? And so if I'm still getting, you know, 5%, whatever the percentage is right now on the bonds, why, if I'm, especially if I'm dealing with upper millions of dollars, billions of dollars, why would I put my money in the stock market? You know, so the stock market and the bond market have an inverse relationship. They're usually fighting one another for money. So as one goes up, you'll usually see the other one down, and they usually don't move together. So that's what's going on with why the market is down in the first place. Let's look at Nvidia. You see this? People are freaking out. Nvidia brings in $100+ billion per year. I'll take it at a discount. That's how I'm looking at it. Pass me the rock, I'll shoot it. I'll take it at a discount. Let's look at AMD. AMD in a downtrend on a discount. It is discounted. When you look at what kind of numbers AMD is going to pull over the next year or two, hey, pass me the rock, I'll shoot it. 116, I'll take it every day. Amazon sitting at 218, down just a little bit, still in the uptrend, down a little bit. I'll take it. It's at a discount. Pass me the rock, I'll shoot it. Tesla. Look at Tesla, 394. On a discount. It's not down, it's on a discount. 394, I'll take it. Pass me the rock, I'll shoot it. You have to change your mindset when you're looking at stocks. If the company is a brand name, if they're producing a revenue, if they're producing good revenue, bringing in profits, like, it's on sale. It's not down, it's on sale. So things that can turn this market around. We're about to go into earnings season. So all the companies are about to start reporting all the Q4 earnings, and if we start getting beats and raises, this market is going to turn around. You're going to see clips on CNBC go from, oh, the market's falling apart, to, oh, it's not so bad. You know, things are looking up. S&P at 700 by the end of the year. You know, things like that. It can flip real quick. So don't get shaken out your spot. If anything, add to it. Well, we got a new president coming in. You know, old new president coming in. Usually those days are exciting for the markets. You know, so it's tons of things happening here. But don't get afraid. So you have to understand something. As long as the big hedge funds, I'm talking about BlackRock, State Street, Citadel, they deal with some high net worth, high value clients, right? Do you think they want to report, hey, Mr. Smith, well, we kind of lost you multiple billions of dollars year over year? No. If anything, they have so much money, so much control. Wouldn't it be more advantageous for them to bring the market back in a little bit, buy things at a cheaper price, and then report back to Mr. Smith like, hey, look at all the returns we got you? So until those big hedge funds tell me, hey, we're packing up and we're getting out of U.S. equities, I'm buying the dip. I'm buying the dip. So if you made it to the video, thank you. Please help me get this video to 30 likes, because we want to get information like this, good positive information, out in front of as many people as possible. So thank you. Until the next time. Peace.